Paul, before we get into the price activity in the U.S. dollar, let's talk a little bit about that CPI number, which just came out here this morning. It's a major focal point. We've had a lot of activity from the Fed this week, so I'd imagine investors are going to be looking at this number at 7:30 a.m. Central Time. Let's take a look. Let's pull up a full screen so our viewers at home can see. The numbers, for the most part, it looks like, Paul, came in line with expectations, actually in line to the mark with expectations. The CPI on the month-to-month down 0.1%, the year-to-year 1.9%. Core CPI 0.2%, and the year-to-year on the core came in 2.2%. Paul, I'd imagine that these are numbers that, for the most part, are going to be supportive of the rally that we've seen. It looks like they're not too hot. Maybe a little bit of concern in terms of that month-to-month number coming in a little bit lower, but we're talking about 2% CPI on the year-to-year. That's pretty steady with expectations, and from what I've been hearing from what the Fed's looking for.
You know, it absolutely is, and we heard it from Jay Powell yesterday commenting that, you know, inflation has really been kind of stuck, if you will, 1.5% to 2%, and, you know, really doesn't look like it's getting much hotter than that, even with wages picking up here. So we're getting good inflation data, should keep the Fed on the sidelines, but we'll have to see. But, you know, it's one of the few economic numbers the economists actually got right this time. But inflation really for a long time has not been the biggest concern here in the economy. It's been trade, it's been the government shutdown, if you will. And as you mentioned earlier, all of that has had an impact on the dollar. We're seeing a little dollar weakness here. 95 really, if you scroll out a little bit and take a look at the last 5 years or so, 95 kind of is an important line. You know, we can get above 95, we can run to 100, 105. You get below 95, you get down to about 90 on the dollar. So that line really it's crossed it a couple times on its way up as well as down. So it's provided some good support as well as resistance. Now that we're below it, I think it opens the door for a little bit lower dollar here.
So, Paul, let's talk a little bit about Brexit, because it's certainly been one of the focal points and definitely a contributing factor to some of the price activity we've seen in the dollar. But needless to say, it's been a bit of a roller coaster. What's the latest? What have you been hearing in terms of what's been going on?
Oh, Brexit's still a mess. They're talking about maybe postponing that decision, and that's actually put a little bit of a pop into the pound. The pound had been on a slide really over the last 3-4 weeks or so, and getting close to the lows that we saw 2-3 months ago. So we're getting a little bit of a bounce here. Whether it sticks, we'll have to see. But that's putting a little bit of pressure under the dollar, but not terribly much. But that's really the big news this morning, and giving a little bit of a boost to really more the pound than anything else.
Yeah, you know, Paul, we keep hearing about all these different options to potential Brexit deal and some of the possibilities, and how no Brexit is one of them. I wonder, is it really, though? I mean, is it really a possibility to go against the will of the people? They voted for this. I mean, I'd imagine pro-Brexiteers would not sit by idle if their voices get silenced. They'd probably make that French Revolution, the movement and the Macron fight look like a spat over a parking spot.
You know, it's going to be an interesting debate, because the line is late spring, early summer in March, April, May period, and that's going to be key. Whether they're going to be able to postpone that under the guise of we're still negotiating, we're still working on it, and whether that's going to be a hard deadline or a soft deadline remains to be seen. But you're right. You know, with the possibility of postponing, and I think you're starting to see sentiment moving more toward maybe we stay in the euro. This is getting to be way too complicated, way too messy. The good news from a British perspective is they have and always have maintained their own currency.
Right.
Very different than the Eurozone, which is celebrating 20 years of under the euro.
You know, Paul, I wanted to get your thoughts on the Fed, not only Jerome Powell, but some of the other speakers this week. In addition to the FOMC minutes, I mean, it's been a Fed-heavy week. There's been a lot on the plate for traders to digest. Talk to me about what stood out to you most in terms of comments or, market reaction to comments as far as some of the Fed speakers, FOMC, and Fed Chair Jerome Powell yesterday.
You know, the Fed chair really has been front and center since October.
Okay.
And really there you take a look at it as somebody learning how to ride a bike. You know, it's a little wobbly to start with and finally figure out how to balance the bicycle. I think he got a little bit of help from Yellen and Bernanke at his chat out in San Francisco last week on how to talk to financial markets. And really what the financial markets have keyed off of is a very dovish tone that we are data dependent. You know, he had been walking the line of, we're going to be cutting the balance sheet, we're reducing the balance sheet, we're going to be raising rates, the economy can handle it. The financial markets really didn't want to hear that because they've been living off of a very easy monetary policy and plenty of liquidity, and they're seeing it dry up, and that's really what has had the markets in fits. Now that seems to have been reversed. And is a lot more dovish, and it's been confirmed by Clarida and a few others that they are a little bit more data dependent, and that's really put a boost underneath the equity markets, and it's also actually pushed up the yields a little bit, and also had an impact on the dollar, bringing that down a little bit.
Yeah, and it's also, you mentioned confirmed by some of the Fed speakers. I was going to say confirmed by this movement in the dollars. You finished that thought off with. Real quick, Paul, let's talk a little bit about the peso and the Canadian dollar. I've been watching them both rally this week. What's behind some of the bid?
You know, I think here it's an energy story. You know, you're talking about energy getting a little bit of a bid and moving from the 40 range into the 50 range, and I think that's helped both the Canadian dollar and the peso. The Canadian dollar, if you take a look again, is at a key level. Again, long-term resistance support area needs to get up a little bit to get a long-term bid going. Peso, I think, is moving more with the continued trade talks. We've got a deal made. There, obviously, currencies here.